everyone. Welcome back to my channel RJ Trades, and today we're gonna talk about credit spread. A lot of people requested they wanted to kind of know everything's ins and out about credit spreads, what are its risk, and things like that. So today in this video, we're gonna talk about credit spread and what are its risk and how to do credit spread and things like. A lot of the platform like Tastyworks or E-Trade, and they make it easy. You can just kind of click. They have options, but in Robinhood, they don't have a default option, so you need to kind of do it yourself. But this is good in the sense like you understand what credit spreads are. So in this video, we're gonna talk about credit spread, how to buy credit spread, and um, and yeah, pretty much what are its risk and things like that. So one thing, main difference in debit spread, when you are doing debit spread, you are saying, let's say, so we're going to look at the example of SPY, and I think SPY is a great example in the sense like with the stocks, when you do debit or credit spreads, things can happen, right? Like they can have random news, and those effect. You don't want, you want to pick a less volatile one, not a huge volatile one, right? If you pick a huge of course you will get good premium, but the thing is like it can also backfire. And in credit spread, you are making a little bit of money and risk is a little higher, but the thing is like most of the option expired worthless, like about 90% of the option expired worthless. What does that mean is basically buyer and seller, those are gambling. I mean, they may hit some home runs, but most of the time they are gambling, they lose, that's a fact. Because 90% of the option expire worthless. Well, of course if you are deep in the money, but if you look at the volume deep in the money, there's very few volume. So if you look at the numbers, most are kind of speculative. They are saying like SPY gonna reach 350 or 360 this week, and those kind of most of the time, 90% of the time, they expire. So today we're gonna kind of see how can you take advantage of that, right? So if 90% of the time they are losing, how can you win 90% of the time and lose 10% of the time? That's why your reward is not much, but your percentage wise you are winning so many times. So if you maintain that, it's a great strategy, and big player do this the right way. So this is also called theta strategy. So in this, you just want something flat or a little bit movement, not too much movement, and you're making money as the time pass, right? In options, you're losing money every day when you are buying and selling, but in a credit spread, it's a theta positive, so you're making money if it stay flat or move a little bit up, unless it doesn't touch. So we're gonna dive deep into those and kind of show you. So this is SPY, this is Robinhood, everybody's favorite. Mine not so favorite, but it just a lot of people are in that, so I do use it. Free commission, so that's always good. But let's look into it. So trade SPY options, right? So I'm gonna go and click SPY. So we're gonna start with the call credit spread, right? So call credit spread, you just switch the strike price what you used to do with the debit spread. In debit spread, you buy the lower strike and sell the upper strike. In credit spread, you do exactly opposite. You sell the lower strike and buy the upper strike. So I'm gonna show you, right? And I'm gonna kind of talk about debit too, so just get a good idea. So debit expiring September 16. If you are trying to do weekly, which probably not a great idea, but let's do it anyway. Just that was a kind of default. So this is 345, right? So let's say you wanna do debit spread. You would be buying this and you selling this. Your cost is 27, right? Your cost is 27. You're paying $24 for this. In your reward is 500 minus so $500 minus 27, so about 473. Yeah, 473, which is awesome, right? You make 473 risking 27. Great. But the thing is like most of the times it does not happen. Most of the times, as I said before, 90% of the times it will never reach to 345, and you lose everything. You lose 27. Not a whole lot, but you lose it, right? So money is money. So what is credit spread? You do just the opposite, right? So what we do is we're gonna pick up same things. So what you are doing is like you are selling call for 345, and you are buying call for 50. Just the opposite. Here you see total credit is 27. So you are receiving this. Your strategy in debit, you wanted it to go reach the upper leg or at least go above the upper leg. Here in this case, you don't want it to touch your lower leg, right? You want, if SPY closes below 345 by expiration, you win. And there's highly chances SPY will be below 345. Right now 338, $9 more. It can happen, but yeah, today 1%. So even give, so 1% is about $3 something, 3. So even if it goes 1% for 4 days, that's like 12. So probably not, but you get the idea. So it's a lot easier in credit, in the sense like basically what you are saying is like it's not gonna reach some points, right? Again, SPY maybe, but if you pick let's say 350, you're not gonna get premium, a lot of premium. But if you go few weeks out, you can make some good premium. So basically it's a lot easier because you are predicting it's not gonna go there, so that becomes a lot easier. Of course, you have a little bit more risk in the credit spread. So what is your total risk and when that happens? So you don't want it to reach 35 plus. If it reaches 345 exactly when the day of expiration, you'll be fine. You don't have to, you're not gonna lose anything. You're gonna make that. One thing though, make sure in Robinhood, if they find it like there is risk, like it's gonna get in the money by 3 p.m. on the day of the expirations, you can look into. I had made a detailed video about that. They will close out your option at 3. So a lot of times what happens, even if it's like 344, they think there's risk it may go above 345 and they sell you out. And if it's 345, you may have to pay a little bit to close it out, so you may lose that time. So you got to be careful about that. But for other platform, you can do it manually, close it like right around 4 or something. I do suggest always close your position pretty early, just to be safe. And if you have not, you probably should check out my video, the risk of debit spread no one is talking about. Same with the credit too, it can happen in any of the spread if you have a short leg. So also you have assignment and all those things, so it's just better to, it's better to take control of your things. That's all pretty much, right? Here you don't want it to reach that. Same thing again, this is safe, this is good, that's why there's not premium, lot of premium. But if it's risky, you can make a good premium, but it's risky too and you can lose it. So your risk is basically width of the spread minus this. So your total risk here is 500 minus 27. So same thing, it's a with it $10, that would be 1000 minus whatever premium you received. And each day time passes, the value kind of decreases, right? So let's say tomorrow it opens 338, it will be 20 cents, so $20. So you can close out tomorrow. For spread, a lot of people are still confused, like you don't have to wait till expiration, you can close out anytime. If it's $10 today, I may close out, I just made like 50 or 60%, right? So I can look for other play. So this doesn't look that sexy, but if you look at something like Tesla, which I don't suggest to do spread because they can move either way really high. But if you look at Tesla, right? Tesla, let's say if you want to do some spread here, so let's say September 18, probably don't suggest again weekly, but let's say you don't think Tesla gonna reach like how that credit spread, I guess. So let's say you don't think Tesla gonna reach like 360, 370 this week, right? So what you can do is sell call 360 and buy call 370, and you make $143. And you collect this if Tesla never reaches 460 by. But if it reaches above 360, then you start losing money. So your break even will be probably 143. So 61.43 are fine. After that, each cent is $1 for you, and max your loss is $1,000 minus 143. That's it. So yeah, this is call credit. I mean call credit spread. That's it for call, right? And now we're gonna talk about put too. So a lot of people kind of put it exactly. So in credit spread, you are getting receiving credit. So where are you? So let's say Tesla is 427, right? You don't think Tesla gonna go 370 this week, right? Let's say so 370. So what you do is you sell put the higher strike. So let's say if it no, that's a iron under I open. So so okay, yeah, you do sell put 370 and you do buy put 365, right? And here you receive total credit of $68. Your risk is 500. So exactly opposite. You just need to make sure it's a credit, so you will see total credit. And once you have that, and your put just your sale will be higher and buy will be lower, and that's a credit. You made $68. If the Tesla doesn't reach below 370, you made money, right? So here basically you are predicting it's not gonna go again for a spread. Tesla is not a good candidate because it can go either way, right? It moves like 50 $60 in a day. That's a very risky. There's some other strategy you can do that, but not this one, right? You can do straddle, but not a great. But again, shall Tesla premium are really expensive, so it costs a lot of money too. But this is just the idea. You can apply for this is good if it's like really low volatile stock. For example, KO doesn't move that much, BAC doesn't move that much. But remember that for those, you're not gonna get a lot of premium. It's about volume, right? And I always suggest like don't put everything in one basket, but rather just spread everywhere. For example, let's say I opened up some XOM credit spread today. Yeah, Robinhood is slow today, but I opened up some credit spread and it was up nicely, like 60% or something. I closed that, so you can just do a lot of those. Those are not really risky, and if you play it correctly, you can actually make some money. And one thing is like a lot of people are looking for home runs, but home runs happen like 1 or 2% of the time. Most of the times, home run does not happen, and people are like, you did a one home run and it's like I'm gonna do another home run, and you keep losing, you losing and losing, right? So you gotta be careful about that. So um, the name of the game is consistent win. Rather than winning like one big winner, you want to make like you win 60 70%, get it 20% 30%. That's how you slowly build your account, right? If you look at the big player, they don't do all these home run, they are just scalping. I mean, not scalping, but kind of swinging, or they are looking for 20 30%. I think gold should be just beating the market. S&P does like 10 12 10%, let's say, on average. So if you do like 20 30% a year, yeah, great. That's like with a 100,000 account, that's 30,000 a year. With $1 million account, that's 300,000 a year. I mean, what else you could ask, right? That's a lot of money. So one thing, you the discipline. A lot of people I see what they're doing is like they made big bucks in Tesla and they started yellowing in Tesla, and next week, boom, they're back to where they started. The last things you want to do is like have everything and then you back to the street. You want to build slowly, slowly. Slowly and steady wins the race. You need to have a patience. As Warren Buffett says, like the stock market is basically flowing money from impatient to patient man. Whoever are patient enough, they get the money, right? You need to have patience, and you need to have a discipline. You need to have a right strategy, right mindset. Yeah, pretty much I covered everything you need to know about put credit spread. Again, any of the spread I suggest closing early. There's always risk of assignment, and if you did not close, whatever it's in the money may not be in the money after the close, and uh, one leg could be exercised and you are left with the other legs, and it can be really painful. So You got to be careful about all those things. But beside that, that's it for today. Yeah, if you have not, don't forget to like and subscribe. That's it for today. Thanks. Bye.